This is Rick Rule for Rule Investment Media and the Rule Classroom, sponsors of the 2025 Natural Resources Investment Symposium, July 7 through 11, either live in Boca Raton or via live stream in the comfort and convenience of your own home. A whole bunch of things you need to know about the conference, so we're going to get to it. The conference will feature in excess of 50 hours of programming, more than you can possibly absorb in the 4 days that we have allocated to the conference. The consequence of that is that whether you attend live or via live stream, you'll have access to the conference recordings for a full year, and you'll need it. Count on spending 150 hours digesting the lessons that we teach on the conference. But there's other consequences too. Another consequence is that we interview every conference exhibitor and every conference speaker before the conference so that you have the opportunity to study the opportunities that will be available to you before the conference. Reach out to the companies, study the companies. That way you can utilize your time and your capital more efficiently at the conference. Finally, understand too that every single public company exhibitor at our conference has been vetted. At every other investment conference on the planet, the qualification to be an exhibitor is simply a check that cashes. At our conference, the exhibitors have to be owned in accounts owned or managed by me. Sadly, there's no guarantee that because I own a stock, it goes up. But there is a guarantee that I have personally vetted and my team has vetted every single public company exhibitor at our conference. That allows me to make a unique guarantee. Anybody who attends my conference, live or live stream, who doesn't believe that they got their money's worth, gets an unconditional 100% refund. The only conference on the planet where you're not exposed to any financial risk for attending. So let's get started. In today's pre-conference interview, I have the great good fortune of talking to a gentleman who I've followed for a couple decades and have come to know much more recently, George Salamis. George, first of all, thank you for your efforts on behalf of mining investors all these years, in particular your efforts on my behalf. And thank you, too, for your ongoing sponsorship and support of the Natural Resources Investment Symposium.
Thank you, and great to be here. And what a hard act to follow in terms of an intro, but there you go. We can talk about all sorts of things. So just for the audience members who don't know, should I launch into an intro or? Sorry.
Let's start by talking about George Salamis. Tell us something about your background. Tell us something about your past successes, and tell us in particular how those successes were germane to the task at hand, how they prepared you for what you're doing now.
Okay. Yes, indeed. So, President and CEO of Integra, obviously, but I've been in the mining business now for over 32 years. Cut my teeth at Placer Dome, a major mining company that some of the audience members might remember. Certainly, Rick, you do. And then on to Cameco, uranium producer thereafter. So about half my career spent, different parts of the world, exploring for and developing gold mines, essentially. And a bit of uranium experience as well along the way. The balance of my career was then kind of transitioning to the wild west of junior mining, so to speak, in the early 2000s. And my first big transaction was the sale of the Kittilä mine to Agnico. That's where I was really bitten by the junior mining bug. Having been trained to kind of recognize value in the earth, maybe assets that have been unloved. That was kind of really key and germane in the early parts of my career, which I then applied to junior mining. And since then, $2.5 billion worth of M&A transactions. The last big success was the Lamaque mine, which was sold to Eldorado for $630 million. And it is now by far their most successful mining operation. They produced their millionth ounce of gold a couple of weeks ago. Congrats to them. But that's essentially what I do, find the assets, build them up, de-risk them, either build them and get them into production ourselves or transact them. That's essentially what I've been doing, Rick, for the better part of the last 32 years.
That's what you're doing today. Tell us something first about the genesis of Integra. Describe, if you will, the assets and tell us where you see going from here.
The history of Integra starts back about 14 years, and it starts with Integra, what we affectionately call Integra 1.0 or Integra Gold, which I mentioned. It was a mining camp in Val-d'Or. It's where I started my career working underground, as a matter of fact, at the old Sigma mine. And it was an asset that we acquired out of bankruptcy. Acquired a mill out of bankruptcy, knowing, of course, that this was one of those assets that was unloved in the hands of a major mining company, but that would work at higher gold prices. So we acquired that asset, had a phenomenal discovery, 2.5 million ounces of high-grade gold, close to 10 grams per ton underground, proceeded to start test mining it, got the mill into partial operation. And before we could reach commercial production, Eldorado stepped in and said, we want that, and they bought it. That was Integra 1.0. Integra 2.0, essentially we kept the band together. Nobody went to beaches to go surf or Japan to go ski and powder. We launched straight into our next acquisition. Again, same thematic. Past producing mining operation, unloved in the hands of a major, didn't work at lower gold prices, but we felt that DeLamar was one of those assets that could work. So DeLamar was and still is today the flagship asset. That's 5 of our 10 million ounces of gold that we have in the Great Basin. Along the way, we did a few other M&A transactions. We merged with Millennial Precious to acquire these great assets called Nevada North in northern Nevada, and again suffered the slings and arrows of the junior development space. We all know what that looked like for the past 5 years. We then decided to do something different, pivot essentially. Enough's enough with this coming cap in hand to the market every year for the same $20 million check from our faithful and loyal institutional investors. We said, enough of that. We need to get into cash flow to cover everything that we need to spend to get to the finish line on DeLamar. And again, something that looked like circa $20 million a year. And that was the genesis of where we're at today, having transitioned from developer to now producer. It's new for us. We're just in the game now 3.5 months. But with Florida Canyon producing, generating lots of free cash flow, and generating a lot more cash than we actually expected to get us to the finish line, we think it's a much de-risked story.
That was a particularly fortuitous acquisition, I think, given the increase that we've seen in the gold price since the time that you acquired it. Am I correct in assuming, too, that your acquisition of Florida Canyon expands the intellectual capital in the company? In other words, your past track record had to do with identifying projects, financing them to production, and either building them or selling them. Now, arguably, and correct me please if I'm wrong, you have a team in place, paid for, that knows how to build mines and knows how to mine. Is that accurate?
That is accurate. We have a staff now of about 280 people at Florida Canyon who have been in the business of heap leach gold mining for the better part of the last 20 years.
And could you talk to me a bit about the potential synergies, if you think they exist, in Lovelock between your producing operations and some of your exploration and development assets?
Absolutely. That and Rick, that's why Florida Canyon fit best in our hands relative to our competitors who also bid on the asset. So we had the ability to point the mine staff at Florida Canyon 30 miles west to Nevada North and point to them longevity in their careers. Their careers, in other words, don't just stop at the 6-year mine life door. They can go on possibly for another 8 to 10 years just at Wildcat alone, which is 30 miles to the west of Florida Canyon. So that was music to their ears. And then 3 hours up the road from there is another 5 million ounces of gold at DeLamar, which is a project which is kind of top 3 most advanced, into NEPA permitting at the moment. So, the ability to show these synergies to the mine site was really germane in the reason why they chose us to be their new stewards, so to speak. It's a great setup. All of these assets are within 3 hours drive of each other. It couldn't get easier for us.
George, is it possible for you to identify 1 or 2 of the most important upcoming catalysts that investors need to look at in terms of forecasting the growth and success of Integra?
Yeah. So being new in the production space, Rick, I think it's taking some investors time to, really realize that we are actually producing gold right now, and we're selling it at record high gold prices, and we're making great free cash flow, which we're deploying elsewhere, more than we actually thought when we got into this transaction. I think the catalysts are, quarter over quarter, showing an increasing balance sheet, showing cash that we're generating, that we're deploying opportunistically at our other assets. So that's going to be a factor. 2-3 quarters of production, I think that's what it's going to take. This is one of the reasons why we're here today, is to tell people like you to get the word out that we're actually producers, right? And that we've pivoted into the space. I think the second piece for us, in parallel with permitting at Delamar, and we can talk about what that looks like in the, under the current political environment in the U.S., couldn't be a better time than ever to be permitting a mine in the U.S. right now. There's an exploration piece at Florida Canyon, which I think, goes unrecognized. This is a mining asset, again, which has largely been unloved for the last 20 years, which is producing a lot of cash now for the first time in its 20-year history, getting a lot of cash redeployed back into it. And this time in the form of exploration. We think that there's a really big project to be developed, much larger at Florida Canyon than what is there now, 70 to 75,000 ounces a year. We think that we can really improve upon that. Maybe there's something that looks Marigold-like in terms of a production scale. Marigold, just up the road, produces 250,000 ounces a year. Not saying we'll get to that point within a year. Lots of study work to be done. But this transition at Florida Canyon from crushed ore going to the heap leach to more of a run-of-mine heap leach scenario, I think has been a real game changer. And that's only come in the last 2 years. I think there's a lot more of that type of mining to be done. So launching on a big exploration program in May, I think that's going to be another catalyst.
George, the sum of the parts here is interesting. 10 million ounces, I guess, in all categories, but really fairly advanced. Delamar, obviously, with Kinross produced, it's a fairly well-known asset. You stuck a lot of holes in it. You got a lot more holes to go. The Lovelock operation is producing, but the things that you call Nevada North, Hasbrook, Three Hills, those things, fairly well known. And now the production scenario. So what is somebody paying? What's the market cap of this collection of assets? And what, if any, is the enterprise value?
So whoops, sorry, I just lost my earphone there. So essentially the market cap right now is about $200 million. So we're, on a, pick a Bay Street metric, for example, PNAV. We're trading at a PNAV of 0.25, essentially relative to our peers.
And for our audience not from mining, what is PNAV?
It's price per net asset value, essentially. So if you look at this sort of the universe of junior gold producers, they're kind of trading in a 0.4, 0.5 PNAV. We're at 0.25. And we're just getting started. So there's lots of value to accrete to our share price in just that re-rate factor, with the recognition that yes, Integra is producing gold, and we are gold producers, and we're here to stay. And we think that that's going to come in the next 2 quarters.
For our audience who is international, is that $200 million number a U.S. number or a Canadian number?
It's a USD number.
Great. So 200 million U.S. market cap. Is there any debt? If so, how much? And is there any cash on the balance sheet? If so, how much? And what would you estimate at today's gold price that your deployable cash flow will be?
So just to start with the cash position. So as at year end, which is what we just reported, Rick, we had $52 million of cash on the balance sheet. So record numbers of cash relative to at any point in time that Integra has been over the last 12 to 15 years in its 2 incarnations. So that's great news. So lots of cash to deploy. The second piece with respect to breaking down the NAV or net asset value between these assets, there was a 43-101 study which kind of put out a number that wasn't ours relative to Florida Canyon recently, but essentially it was a sales document which pointed to something that looked like circa $200 million worth of NAV there. Our last study point, pre-feasibility study at Delamar, that showed a net present value at $1,700 gold of about $300 million. Wildcat, Nevada North, same thing. So the sum of the parts here, we're looking at circa $1 billion net asset valuations here.
And is there any debt on the balance sheet offsetting that 50 million cash?
Yes, minuscule $15 million convert that we had with BD Capital.
Gotcha. So in effect, that $200 million NAV number that you're talking about can be reduced by $50 million to get an enterprise value. $150 million is buying circa $1 billion worth of discounted net present value. Is that an accurate statement?
That's a very accurate statement, correct.
And how much cash would you suggest at $3,000 gold you will be generating from your operations this year? In other words, will you draw down very much of that $50 million in cash?
So just to again, a couple of quick metrics here, Rick. So we just announced sort of the last quarter of last year in our year-end financials, and really that's kind of the any basis for looking at this asset on a go-forward basis. That's what we have to rely upon because we have not put out our guidance for 2025 yet. We're waiting for our new rock star COO to jump in the saddle here pretty quick, Cliff Lafleur. We can talk about him a bit later. However, that said, if you look at the last quarter of last year, look at the all-in sustaining costs. I think they were $2,100 ish from the last quarter, versus where we're selling gold right now at $3,100 odd. That gives you a good sort of glimpse at the cash flow profile and the free cash flow profile. I think very clearly the message should be the $60 million that we paid for Florida Canyon was a real bargain. It truly was, especially in this rising gold environment. I'd like to claim that we were geniuses in predicting $3,100 gold, but we were not. We were just looking at this just from this needs to pay the bills and that's it. Well, we got much more than that beyond that. But that should give a rough metric. Last year, the asset produced 72,000 ounces. No reason to suspect that it'll produce anything less than that. Last year was a record, by the way. So call it in that sweet spot of 70 to 75,000 ounces. And, pick an all-in sustaining cost roughly in that range. That gives you a really good metric of how much cash we'll actually be adding to the balance sheet.
Masterful answer to the question. George, thank you for many years of efforts on behalf of gold mining investors. Thank you, too, for your sponsorship of our conference. As our attendees want to learn more about Integra, who do they contact specifically, not info at Integra? Who do they contact and how do they contact them specifically?
The best way to get a hold of me, Rick. And by the way, thanks for taking us on. Obviously, I look forward to presenting at the conference, and I've obviously been a big fan of yours for years. So people can contact me directly. Our shareholders know that I'm an open book with respect to inbounds and people asking questions. No questions too difficult. I'll try and answer it at any time. They can get me at george@integraresources.com. That's the easiest way. That's my work email. I respond to emails on a timely basis and will answer any questions that anybody might have.
George Salamus, one more time, thank you for your sponsorship. I look forward to hosting you in Boca Raton.
I look forward to Rick. Thank you.